We are continuing to see a recovery in business travel in all of our markets, particularly in San Francisco and Washington, D.C. And then leisure travel is also staying resilient. Now, they're becoming a little more price sensitive in some areas of the spectrum, but overall demand is still up.
I'm here today with Raymond Martz, co-president and CFO of Pebblebrook Hotel Trust. How would you describe the macro operating environment for Pebblebrook today, and how are you positioned to react?
The macro environment, we're a couple things. As we started the year, we were a little cautious about the outlook, really given the Fed's stance for higher for longer with interest rates. And that matters because that really affects the transaction market. And right now, for the last couple of years, because of the discount that we're selling to our NAV, we've been looking to sell assets and buy back our shares and pay down debt at big discounts to our NAV. But the macro environment right now with interest rates staying up higher for longer is putting a little pause on that. So that's made that side a little bit harder. And on the other side, as relates to demand for business travel and leisure travel, we were cautiously optimistic about it, but realized there could be some headwinds because of the Fed. Fortunately, so far the year has been played out pretty much as we thought. We are continuing to see a recovery in business travel in all of our markets, particularly in San Francisco and Washington, D.C. And then leisure travel is also staying resilient. Now, they're becoming a little more price sensitive in some areas of the spectrum, but overall demand is still up. So overall, pretty encouraging, even though we're in a more cautious environment than maybe we would have thought 6 months ago.
And what issues do you expect to be prioritizing for Pebblebrook over the short to medium term?
Well, really right now, since we're trading at a discount to our net asset value, is continuing to sell assets at our NAV at market and taking that capital some of the capital to reduce our debt and some of the capital to buy back our shares. Last year we bought back over $100 million of shares. So we bought back about 9% of the total outstanding shares since we started this. So we think right now that's the best use of our capital. We're not looking at new acquisitions. It's really focused on selling some of these assets in some urban markets that will take a longer time to recover and redeploying that capital back into buying back our shares.
And is there a particular project or initiative currently underway at Pebblebrook that you're especially excited about in terms of its ability to generate growth and enhance shareholder value? We
have actually several projects we completed over the last several years. We've invested about $300 million in what we describe as redevelopment ROI projects. So we completed just recently last month, the redevelopment of Newport Harbor on Goat Island in Newport, Rhode Island. So we invested $50 million there. The resort looks spectacular. We've upgraded the rooms. We have more outdoor space for bars and restaurants and a lot of event lawns to do additional activities there, both for the corporate group and the leisure customer. We also completed the reopening and conversion of Margaritaville in downtown San Diego, was the Solomar Hotel. That property is ramping up great, as is the Hilton Gaslamp just down the road. And then just recently we finished our redevelopment of Estancia in La Jolla. So we have a lot of these great projects. We should be generating good double-digit returns, and we estimate right now ROIs in the 11 to 14% range, and this $300 million we've invested. Now it'll take a couple of years as we ramp up and we get new customers on, but we're very excited about that. So when you look in addition to the upside from the urban recovery, which we're continuing to see, combined with the recovery from our redevelopment projects, we're really excited about the next couple of years, so long as the economy holds up, of course.